So I think that we move to the next part. It is the panel discussion. So in this part, we will system level integration about AI plus Web3. So first part is I'd like to coordinate invite the panel speakers, maybe from the deck showcased. Let's every panel speak, give a quick brief about yourself. Start from Mark, even though you have a presentation before.
Yes, yeah, thanks again for the invitation and Stanley and also Serena. I'd love to visit Switzerland again. So my background, I've started my career in education. I was teaching math and computer science for a long time. Worked at the Ontario Ministry of Education. And then I jumped the fence, started to work in the private sector about 10 years ago with Cisco at the Innovation Center, helping C-level executives understand how technology is changing the industry. And I had a chance to work with one of the co-founders of Ethereum in 2018 at Consensus. Some of our biggest clients were Fortune 500, developing EVMs, MetaMask, Infura, a lot of these technologies coming from there. And currently, I'm teaching strategy at the MBA at this new university here, IBU in Toronto. I'm an advisor for startups in quantum and blockchain at Creative Destruction Lab, which is a non-equity dilutive incubator program at the University of Toronto, but also in HEC Montreal in different countries. And I'm helping founders go to market. So that's pretty much makes me a busy man.
Thanks, Mark. So next one, we will have the panel speaker, the professional law firm as well as the entrepreneur. Mark, could you please give a brief about yourself?
Yes, thanks for having me here today, Stanley. I really enjoyed all the presentations, and I feel like there's some great kind of common denominators that really weave nicely into our story at Comar Mole, which in many ways, I mean, I was at my partner and I were at big multinational law firms. I was at Fried Frank and he was at Latham and Watkins, and we saw an early need in the blockchain world with these frontier sort of asset classes. Actually, we had some early AI clients, like even back in the day before transformers and neural nets became all the rage. So that convergence conversation was happening early on. And one of the things we saw was the need to practice law in a new way from sort of a first principles perspective, as opposed to a reactive perspective with respect to all the local laws, because you're swatting away all these kinds of jurisdictional issues as opposed to developing a central concept that you can thread through all the various jurisdictions, whether that's Canadian provincial law or Swiss sort of foundation law. And in a sense, like it was really great to hear the IEEE discussion of standards, because we've been pushing this kind of notion that there needs to be a codification of some of the legal principles, and along with a coherent taxonomy. I think you use the Lego approach, and toward that end, I mean, we realized we were providing value to our clients as a law firm, but decided, not too long ago to actually team up with one of our clients and build a blockchain, an innovative Bitcoin-based blockchain, to launch a new product, a new protocol, in fact, called Solace, which solves a lot of the fragmentation issues, or is designed to solve a lot of the fragmentation issues. Because I think on the one side, the technology is headed towards this standardization, consolidation, interoperability, modularity, so that everything kind of talks together. But on the other side, and even you heard hints of this in what Mark was saying, the Canadianization. You heard, Richard talk about, local regimes for how law is enforced, and subtly in sort of Serena's conversation about how, it's Switzerland versus Cayman versus BVI. And one of the things that we're sort of trying to do is to address that, the truth that no matter how well the technology works together, there's still these what we call brick and morbid realities of, of the legal system that end up distracting so many founders and so many projects. So our first product with Solus, which we're sort of bringing to market, and we have a proof of concept, is a universal settlement agreement, which I actually think is an interesting kind of concept, because we're pioneering this new domain of peace technology, of resolution of disputes. What's happening now with artificial intelligence is every single person shows up to a dispute with the world's greatest lawyer or what they perceive to be the world's greatest lawyer in their pocket. So formerly, it was easier to settle disputes because you had a couple of issues. But now, if someone has an issue, they tell Claude or ChatGPT, come up with 50 arguments as to why, I've been wronged. So you end up in these situations where things that were relatively easy to resolve now end up at an impasse ab initio. So against this backdrop, we're trying to use some of the blockchain infrastructure to enable settlement of disputes. So the Solus product essentially was fashioned around this notion that you should be able to use stablecoins to propose a resolution. A stablecoin amount was in escrow, and a neutral third party could say, okay, here's the amount. And then a party could simply sign the transaction, and this would settle a dispute, and it would be enforceable both, on chain and off chain. And one of the interesting sort of catalysts was, though this idea had come to us ages ago, we couldn't get any kind of anyone to listen to this until we started talking about agentic commerce, because the notion of two agents, and we can simulate this kind of situation all the time. If you ask Grok a question, and if you ask ChatGPT a question or Claude a question, they'll come to different answers. So the reality of agentic disputes is shortly over the horizon. It's not that far ahead of us. And when agents get into disputes, what are they going to do? Are agents going to hire lawyers? Are those lawyers going to charge those agents contingency fees? So the necessity of building an on-chain protocol that provides off-chain finality and resolution was sort of the most acute mandate, which is what we've been thinking about from a cross-border perspective increasingly. So
thanks, Mark. So next one, quick brief, Serena. Go ahead.
Okay, thank you. So I mentioned that I'm from the finance background, but specifically my expertise lies in private banking, wealth management. So I advise on a family office right now. So all this about the private wealth management stuff, cross-border wealth solutions, wealth plannings, taxations. But blockchain and AI is my passion. And so I also advise on two startups. And one is data security hardware and built on blockchain. Because myself, I've been in crypto for 5 years, and I've seen lots of scammers. Friends around me got scammed and their wallets get drained. And I can also, later on in the AI era, and lots of loopholes on the internet security will be found by the hack AIs. So I see how important the private data and also digital assets security for those things are important. So I am very passionate to be part of this startup. And also the founders, he has 30 years, actually 30. He's an engineer. He has 30 years in the telecom industry. He has resources and knowledge. And the second project is an AI mental fitness, and it's an AI app. I also like this because I know how important the mental issues. Everyone has some issues with mental, and it's never a shame to admit that. I listened to a podcast days ago, and in the guest speaker says, when someone asked, do I need to have a therapist? And he said, of course, you need to have a regular therapist, because, for example, he also compared this to gym. People go to gym, not you suddenly get very, very fat and you go to the gym, but you want to maintain your fitness, you maintain your health conditions, your body figures, you go to gym every day. And the same does therapist. And so that's how I like the idea of this mental fitness app. And I think everyone should regularly massage their moods. That's a quick introduction for myself.
Okay, so next one is the partner from CDDJP, Seven.
Okay, thank you, Stanley. Nice to meet you again. It's a long time. I'm Seven Go. I come from the CDDJP, and my background is the economic doctor, labor economy, and my working experience is mainly focused on the blockchain from the 2017, and I have served as the fellow research of the Huobi, is a exchange, and also I have started my own Web3 project for 2 times. One is for the cross chain, and another for is the ZT virtual machine. Yeah. After that, I worked for the Jupiter Dragon, and now I in charge of the operation of the CDDGAP. Okay, that's all. Thank you.
Thanks. Thanks, Dr. Guo. So next one is additional entrepreneur, Himo. Himo, can you give a brief about yourself?
Hey, sure, totally. Hello, it's glad to be invited. So, this is Himo from Trader. So, we are a project that help professional and professional trader and financial institution to build their own multi-agent team that convert AI deep research into agentic actions over the financial market, especially for stock, crypto, commodities, and forex. So, we are being backed by Google Venture, Google, Hashkey, and more, and it's trusted by a couple of 100K global traders across US market, Canada, Hong Kong, UAE, and more. So our whole team comes from Silicon Valley and New York with 10 years of experience in especially payment and the financial industry, serving especially like those leading companies such as PayPal, Stripe, Binance, OK, Polygon before. So it's happy to be here and talk about the future of AI and the crypto market. Thank you.
Thanks, Kimo. So here we have the panel discussion. We have three speakers from different regions, Switzerland, Toronto, as well as Hong Kong. And we also have two entrepreneurs, both involved with AI plus Web3. So we will have additional 3 to 5 questions, and I will select most relative panel speaker join the discussion separately. The first question is regarding AI plus crypto convergence. So the question is, where do you currently see the most real traction in AI plus crypto converge, not narratives? So this question I'd like to invite Himo, Mark Moore, as well as Mark Liquor, you three, to discuss about this question. The first question,
cool.
maybe how about Himo? Yeah, from you firstly.
Oh, sure. Okay, so a selected question for speakers. Thank you. It's happy to talk about this one. So actually, there are a lot of scaling chains, which we are very looking to as well. But candidly speaking, as you just mentioned in the question, so it all depends on first of all the traction, the real traction, and it's not just about like a narrative. So as a team with super solid experience across payment industry, so actually the one that we internally are super believing, and it's also happening now, is the stablecoin, which is one of the biggest topics today, right? But candidly speaking, so no matter from project or also from the real business perspective, the things that still are not happening really fast is about the traction and the real adoption. I believe this is something that no matter from which side, everyone are actually seeing. So we are still looking heavily into this market because stablecoin, and especially when it comes into the agentic payment and together with the micropayment utilization, it's really helped quite a lot to resolve quite a lot of the problem in the traditional not just about the settlement time issue, but also the base fee issue for AI driven micropayment system. But still, as we can see, first of all, for typical stablecoin transaction, we are still facing a lot of the jurisdiction problem on top of the legal rules. And in terms of the agentic payment, so it's still we're still looking for the tipping point for the demand exposures. So this is something that we're still waiting, but I believe once it's happened, it's gonna to be a super huge market for everyone. So for the other one that I think we are seeing a lot of the real traction, and I think it's actually heading to everyone's real life today, is leveraging AI as the power to first of all to understand, and secondly to act on blockchain infrastructure. So this is a very interesting one. So it's actually not literally just tie with trading market, or maybe many people may have heard of today, many people use AI to not just about write a smart contract, but also fight bugs or hijack into different projects underlying system. So this is something that very interesting. So technically speaking, even though we are saying blockchain infra are providing transparency for everyone, but previously this is just a privilege for engineer or like high-tech teams such as hedge funds. But now together with AI, everyone has the capability to understand, for example, what is happening under like the hyperliquid pool across different chains, and what's the potential arbitrage opportunity across different systems. And if I find out an opportunity, I can just literally leverage vibe coding to find out some opportunity or build up my own product to maximize the chance to earn money and or to build a project on top of that. So this is something that we are like really like love, and also we are also leveraging the AI's web coding technology to build quite a lot of like trading and fast data discover system to help all our trader and financial workers to find out the fastest insight across those on-chain infra. So this is something that actually happening quite a lot right now across all the retail user, but also the institution users. So this is something that we are really seeing a lot of like good tractions.
Thanks, Himo. I'd like to also highlight that Himo is also our portfolio in CDDJIP. So there's no one is Mark, because you also involved with Agentic entrepreneur. Could you please share something from your perspective?
Yeah, I think a lot of the themes that Himo cited are very clear. But I would say that what I think a lot of the AI meets crypto narrative convergence stuff is about the complicated things, using AI to do something fancier, something smarter, something more insight on chain. But I think the ultimate convergence that I've seen, like a huge unlock, is in the nuts and bolts of adoption and security. I mean, Coinbase just rolled out their model context protocol and it's still in its infancy because, the trust is not completely there yet. But what I've noted, I mean, I don't think people in the crypto space who've been here 5 years, 10 years, never mentioned, it's the OGs who read the white paper were like sold and figured out how to get Bitcoin. They don't realize that they suffer from an extreme curse of knowledge. What it's called, which is to say that when you're on the inside, you're like, oh, it's so easy. It's just a couple of buttons. Like it's just a MetaMask kind of transaction. But comparing Apple Pay to MetaMask is still daunting for your average user. But, comparing that with and user experience research plays this out. And the reason why adoption is like, so every single little bit of latency, and as our attention spans get lower, the less we can sort of tolerate things. I think the larger interface moving from the visual designation of wallets and all these kinds of checks that are visual to a conversational interface where I can say to Claude or ChatGPT, hey, pay Himo $50, and it comes back and says, this is Himo's wallet. I've confirmed it's her address. It's tied to her ETH name, or it's over your limit, or this is a new address, or I've simulated the transaction. It doesn't look good. And I think that we can solve that. I see that as the ultimate sort of point of convergence, because there are serious utilities and benefits to a culture of ownership, a culture of decentralization, but there's also things that people in the crypto space don't like to admit. There's a user experience drawback that could be solved by, all this new move towards a chat first crypto experience, which I think is a huge unlock.
Thanks, Mark. So next one is Mark, because as you know, Jeffrey Hinton's circle existed in Toronto downtown. We have lots of talent here. So what's your point towards AI and crypto converge, especially in Toronto, in Canada?
Yeah, I think convergence is the word. From an engineering perspective, this technology is still very new. So people are still building. Last year, when September, when we saw the first cohorts of the year for CDL, Creative Destruction Lab, everybody was going into X402. X402 is a protocol that was created by Coinbase, basically taking the HTTP protocol that we're using every day to go on the internet. That's what is on your address bar and your navigator. And 404, you're probably familiar, file not found, page not found. So 402, payment not found. So somebody said, hey, we should actually develop something to actually complete the payment online, right? So Coinbase developed that protocol online. So you have payments by API, you have raising agents, and since last September, we had OpenClaw, the different names that they have. You have so many agents coming up. There was actually a very interesting conference a few months ago in Boston with the IEEE group that was here in near Boston area. And it was amazing. You had so much development. So Google is developing their agent to payment protocol. Everyone's developing their competing protocol there. So there's a lot of acceleration on developing payments through APIs. Add that to agents. This is where we are today. We have it's actually working. We have last week at the Toronto event, we had an engineer from AWS showing you how to deploy on the cloud X402 protocols for blockchain and agents. Maybe if I can just open up with the conclusions to open wide up. It opens the door now to actually fix the problem that this technology doesn't answer, which is how do you interoperate? So I just wrote an article with actually a colleague in Silicon Valley to put some stops and some control over agentic AI payments. It's been published on the IEEE journal. I'm going to put the link for you guys. But then there is also an industry connection on digital trust. How do you trust the agents? What are the permissions on agents? How you leave the agents free on the wild to act? So it's just the beginning of this.
Thanks for the sharing. So next question is regarding RWA and the narrative RWA stablecoin. So for these questions, let me rephrase it. I'd like to invite Dr. Guo Seven, Serena, as well as Mark for discuss for this question, because this is take place especially in the major financial centers right now. So my question is, we will start from Seven. So the question is this is two questions, but I like to asking the same question. For stablecoin settlement, will stablecoins become global settlement layer or remain fragmented by jurisdictions? Also for RWA tokenization. So what is the main bottleneck for scaling RWA today? Legal structure, liquidity, or infrastructure, or something else? So first, I'd like to invite Seven to give your opinions regarding this.
Okay, thank you, Stanley. Obviously, stablecoin are bound to become a key tool for global settlement, just as cited by the sub speaker in this event. We just heard that because the blockchain is permissionless, it's its nature. So I think the stablecoin vision is very clear. And another question for the RWA. I would say on the surface, the biggest challenges facing RWA is liquidity, but the root cause of the insufficient liquidity lies in the inadequate infrastructure. One is the infrastructure for the risk control data, and the other is system for the entity credit. Yes, I believe entity credit remains indispensable even in the on-chain ecosystem. That's my brief opinion. That's all. Thank you.
Thanks for your sharing from Hong Kong. And next one is Serena, because Switzerland is also the financial institution center, especially in Europe. You are in the intersection of Web3, financial center, as well as AI. So what's your observation in this area?
Yeah, thank you, Stanley. I love this question. From a personal perspective, of course, I would love to see the stablecoins become a universal settlement layer. Of course, it could make cross-border payments, travel, trade, business dramatically more efficient. But however, what is happening is not purely about the technology question. I think it's ultimately a geopolitical and a monetary policy question. Actually, I've been discussed this with my friends in my podcast before. Stablecoins, yes, but the key question is in which currency, right? Today, you talk about stablecoins, maybe you are referring to USDT, USDC, but they are US dollar stablecoins. They are the dominant in the market, right? So that's exactly what the US would like to see, because the stablecoins, they act like reach out to the other economy. I mean, the economies in other jurisdictions. So the other jurisdictions, actually, they don't want that. For example, in Europe, we've already seen that the USDT, USDC paired cryptos, they are asked to delete from the major exchanges here. So the reason is simple, because the currency is not just about the payment. It is a strategic tool of economic policy. So the debate is actually not new. If you know the Bretton Woods conference back in the mid of 90s, Keynes actually, he proposed a supranational currency called banker. His vision was to create a neutral global settlement currency that was not controlled by any single country. Unfortunately, that proposal was rejected, and the international monetary system was built around the US dollar after World War II, which was backed by gold back then. Okay, that's another narrative about how US dollar is backed. But today's stablecoin discussion is revisiting in a similar question, like should this global settlement be based on one dominant currency or on a more like multipolar system, right? So my conclusion is simple. Yes, stablecoin will become the important global settlement layer, but I don't think we will have a single universal stablecoin. We will likely to see a world of multiple stablecoins dominant in different currencies, and the forex market will still continue to play its role.
Thank you. Thank you for your sharing from Switzerland. Also, Mark, you are based in New York City. You're involved with Agentic entrepreneur as well as a professional law firm. So what's your perspective on this topic?
Yeah, I also love this question, like Serena, and would love to hear that podcast because I think your insights on this are invaluable and very interesting from the Swiss perspective. I think that there's a need for standardization and uniform. The overall theme, I think, is everyone wants to make things more uniform and standardized, like, and that things are simultaneously becoming more balkanized and regionalized. And that's no exception in the US ecosystem. As you guys know, we have this sort of system of federalism. It's not as elegant and beautiful as the word canton and the ways that, but this is becoming an even more acute issue. What can the states sort of assert as their jurisdiction versus what the federal government can do? And this is the doctrine of sort of federal preemption. This is all front and center. I mean, the stablecoin context, people think it's resolved because of the Genius Act. The Genius Act is the one that's passed. Of course, we're waiting anxiously whether the Clarity Act will or will not pass. Until then, there's a full-on, state, and not just state, local sort of divide. In New York, we have the bit license, which is another reason why, a lot of the basic crypto products are not available in New York. But even under the Genius Act, which solved the stablecoin issue in the United States, there is a stratified dynamic where, it broadly preempts states, but you can, like, if you're a state issuer, you can remain a state supervisor below $10 billion. And then the state has to, the Treasury certifies a substantial similarity to federal regulation. You sort of get to level up. And there's a section with foreign enforcement and foreign kind of regimes that's also subject to a comparability requirement. So you see this whole kind of fragmentation that's driven by legal, obviously Tether, chopping off different sorts of things. So in the technology layer kind of converging. And I don't think I see a solution to that in the near term. I think that's going to get more extreme. What I think we need to start thinking about, and this sort of keys into the whole RWA fractionalization conversation with the big bottlenecks, and it's kind of interesting because I'm gonna play my part as a counterfeit Swiss lawyer for a second, because we did sort of think through these issues about what the DLT, even something like the DLT, what it gives you in the RWA context is claims over financial rights. So real world assets, like we combine real world assets into two kinds of categories of assets. I think of the financial assets, shares, bonds, debts, and things like that, where things like the DLT's approach really works. When you transfer it on chain, it transfers the actual sort of title. And we have a similar dynamic. The UCC, Article 12 of the UCC works in this way for the Uniform Commercial Code, adopted by 30 states. Similar kind of idea that these are assets that move on chain. The thing completely breaks down when you're talking about things that touch the physical space. physical property, real estate, gold, art, all these different things. Some of the fun initial experiments. Even then, even under the DLT, you only get a claim against something. And there's this overlay of, okay, so now how are we going to package this? How are we going to wrap this? And how is this going to deal, with the underlying legal system? And I think for too long, I mean, Vitalik, early days, the examples of smart contracts were all very usable in the actual world. Shortly thereafter, we decided that because we couldn't have oracles determining performance of creative services agreements, an apartment rental agreement, a ride sharing agreement, or things like that, but we could have oracles determining the price. So the whole world shifted. The RWA conversation shifted to those categories of financial assets. So when you look at the RWA amount, the vast majority of that is like treasuries, tokenized kind of securities. And we're celebrating all these RWAs we're putting on chain, but neglecting the fact that the real world infrastructure for last mile solutions, it still needs to converge, with the legal system. I think the biggest bottleneck is the legal infrastructure and coming up with a system that has this opt-in, non-state-based, ideally, maybe an organization. I mean, we kind of imagine an organization of standards and protocols, like the IEEE, that says, okay, this is how these assets are going to settle. This is how these sorts of protocols are going to converge. So then we can move to doing things that truly, I think, the term that we've been throwing around is, as opposed to RWA, the assets, like think about like real world actions. I mean, we celebrate Bitcoin Pizza Day, for instance. I mean, which is like on some level, it's about the absurdity of how many Bitcoin were spent to get a pizza. But on another level, it's this tangible thing that resulted from the blockchain. So if I told you could hit a button right now and take all of your JP Morgan accounts and move them on chain, would that really delight you? And it's kind of interesting. Or would you swap one set of issues for another set of issues? And it's interesting versus if I told you, well, you can engage in a short-term, you're leaving town for 2 months and rent your apartment out, short-term rental, transfer this coin, all of the legal infrastructure and agreements are packaged to that. Or, this kind of asset that was formerly illiquid now is liquid. Like you can sell an apartment immediately without all these intermediaries, rent seekers. So the disintermediation theme and standardizing the legal infrastructure, I think, is the biggest bottleneck. It's what we think of as a legal last mile solution that needs to get solved, especially now when we have agents doing all the intelligence layer stuff.
Thanks, Mark. Thanks for your sharing from New York City. So the last question, since the tight schedule, so we will have our last question. The last question I will ask everyone, start from Mark, one by one. I will ask you to give a quick conclusion, especially from cross-regions ecosystem. How do you compare? I would like to say, how do you highlight the city you are based? So what is the most advantage in terms of your city in terms of AI plus crypto ecosystem strengths? For example, regulation, capital, or execution speed in your city you are based. So we start from Mark and one by one.
Yeah, I mean, New York, I'm a lifelong New Yorker. Let's go Knicks. I don't know if you guys know, we're in the championship, which hasn't happened in our lifetime since 1973. So I feel like one of the things about New York is the impossible energy and the rigor with which we drive and go and go. I mean, I feel like before the internet, New York was the internet. It was 24 hours. It's a city that never sleeps. So to doggedly pursue and there's an edge to that, which is like the kind of prototypical Oliver Stone sort of Wall Street type edge, where I think people go harder in New York. They go faster. They go more intense. I think that it does reflect something about the startups that come out of New York. They're less idealistic ab initio. I remember, old enough to remember when Facebook was like mocked in New York because they're like, they don't even charge money for their product. Like, is that a real company? Like, what are they doing? So the sort of idea of build something utopian and then monetize it later has never been a New York thing. But payments, like things like Venmo, get started in New York, things that have clear, concrete financial value. And I think that's, what New York adds to the blockchain ecosystem is the builder energy, the community. I mean, all the major campuses of the tech companies, Anthropic, OpenAI, Google, all the, I mean, Google owns half of Chelsea at this point. Actually, it's where I met my wife. She was like, in the she works at yeah. But there's so much that that New York has to offer. What I think in this to sort of conclude is what we've been doing a lot on chain is financializing and tokenizing for vanity, for volatility. We've been in a risk on paradigm. I mean, as a longtime derivatives person, there are two zones of derivatives, kind of like there's the derivatives that are the financial weapons of mass destruction that Warren Buffett talks about that add more leverage to the system and more of like a risk on sort of. And I think that the tale of the crypto until this point has largely been sort of a risk on paradigm. Even stablecoins were the collateral for like highly volatile sort of trading. I think this next phase, which I think New York is very primed to kind of lead, is this real world activation, real world experiences, things that add, true utility and make life better for people using the dynamics of crypto that we know and love, decentralization, permissionlessness, a system of record that can't be controlled, co-opted, or modified by intermediaries. And honestly, just going back to the Bitcoin white paper, that was a risk-off white paper. That said, the banks are more risky than programmatic money. Inflationary pressures by government printing money is more risky. So if we go back to the essence of stablecoins as stability and start building in that, and I think New York is going to lead the charge there. So
Thanks. So we invite next Mark in Toronto.
Yes, so look, I'm very much like for the decentralized world. Like for the 10 plus years I've been in this space, I've seen my friends like going all around the world, starting with maybe Vitalik and Ethereum, like moving to Zook, and a lot of people going to Caribbean, and then it was the Middle East, and then Hong Kong, and it's happening all over the world. So if you're working in this space, there's not a single, city where you say, I'm going to stay, 365 days a year. So, but what's interesting in Toronto? Well, it's a very safe space. You have the best universities, some of the best labs, lots of inventions, lots of development. People love building here. On the regulation side, might not be, I mean, we have very solid regulation before FTX because we got our own Canadian FTX, aka Quadriga at the time. But still, we don't have like a really stablecoin legislation. It's in the works with Bill C-15, but we're a little behind everybody now at this point. So don't look at Toronto for the investors or the money. Don't look at Toronto for the best regulation or the best flexibility there. But do look at this as a very chill place where you have the best labs and the best minds and can build the best technology ever.
Thank you. Thank you, insights in Toronto. Additional, next is Serena from Zurich.
Thank you. So actually, personally, I love New York and Hong Kong. I love cosmopolitans. I've been living in Hong Kong for 80 years, and I have a very good friend living in New York. And of course, New York still remains the global center of capital. And I have an interesting story to share that last year I visited my friends in Hong Kong and Singapore. I was checking out how our crypto VC is doing. And they all told me that there's no liquidity in Asia. If you want to find an investor, go to New York. And also we see how the Wall Street is taking actions on blockchain. Mark mentioned this Clarity Act. I also have a close eye on that. And now you have to admit that the US, they're still leading the next phase, the development of crypto and blockchain on the institutional adoption level. But Switzerland has a unique position. It's not a large market, but I think it's one of the most efficient environments for experimentation. Like I mentioned in my presentation, we have the open-minded regulatory authorities, have the regulatory clarity, like the DLT Act just mentioned, and also the digital asset banks. Yeah, we have capital, we have money, but I have to say, people here, the old monies, they're not so open-minded. They're still waiting and see. I can share that. There's no VC culture. Okay, if you wanted to go for VCs, go go to the Silicon Valley. Here, the investors' mindset is also they're looking at your like revenues. Switzerland's proposition is banks and the strong links between government, academia, and industry. So if I have to summarize, Toronto, of course, they produce talents, lots of talents. New York has capital. Hong Kong connects the market. Hong Kong still acts as a very important gateway in Asia, connecting the East and the West. And Switzerland builds the infrastructure and acts like a lab. Okay, that's my share.
Thank you. Thank you. Insights from Zurich. The next one is 7, Dr. Guo. You
Yes.
have work both in Asia, especially Hong Kong. How's your perspective for Hong Kong?
Okay, thank you, Dan, for your side to the Hong Kong. For the Hong Kong, I'd like to say Hong Kong implements open and clear regulations for the virtual assets alongside substantial financial support to cultivate a sound environment for the Web3 development and entrepreneurship. Second, the government invests heavily in the high-performance computing infrastructures and provides generous subsidy to back AI research development and startup growth. The third one is the regulatory sandbox and the cross-sector collaboration scheme are launched to boost integrated innovation and practical applications for AI and Web3 technologies. Limited because of the time reason, I just summary 2 points from the Hong Kong. Okay, thank you.
Thank you.
Stanley.
Thank you, Dr. Guo. Yeah, next one is Himo. Himo, you work both in Silicon Valley as well as Asia. So how is your opinion regarding different jurisdictions, AI plus Web3 policy, regulations, innovation, and execution speed?
Right. So that's a very interesting one. And also, we used to have some project, during the last year's, RWA hype to clean up all the, feasible routes and also the regulation towards, some RWA project setup. And it's also very interesting to literally did some side-by-side comparison for those regulations and the route across those areas. So as a result, so even though I'm from Silicon Valley more, but candidly speaking, so I still agree on the previous speakers statement. So basically, I think New York is still still on the center of the game. So not just about it has the the best Wall Street and also the parties to move all the regulation ahead, and also it has the best player and smartest mindset together with all the capital to act on the same thing together. And most importantly, from what I witnessed this year, so as Mark just mentioned, so even though for New York right now they are actually execute very fast. So some people are still saying, US people, we have a great life-work balance, so therefore we move slow on the actual execution. But it's actually from what we are seeing here now, not just for New York, but also in Silicon Valley, it's actually not like that. People are really acting very fast towards AI and also towards the new crypto chain and stablecoin, etc. So I think things are really, really moving fast over here. And then on the other side, so we also help many team to work through the regulation in the European area. And it's actually very happy to see that. So what surprised us was the financial rules out there in terms of how to build up regulated RWA project out there. It's very, very seasoned. So actually, I think the greatest one across many countries. So that's a good one. But very interesting thing is that so the execution speed is actually slightly slower. So usually 3 to 6 months is behind compared with other countries. So maybe that's something that just for some sharing. But still for actual project running, you need to make decision where your money is, what kind of rules that complies more with your project. So I don't think it's a problem, but it's more about some information for sure. And then in terms of Hong Kong, so I think it has the best combination of the capital project builder because it has a lot of like cool, builder from the Asian area, and also it has great regulation system in terms of the or the institutional level financial demands. But still, so I think in terms of the openness and also how to clean up those strict question in terms of the legal and also the financial system when crypto capital go conflict with traditional capital and money. So it actually takes, I think, longer time compared with other countries to really figure those out. So those are the things that we are witness today. So but still, as I just mentioned, so it's not a bad or good thing. It all depends on what you are looking for and what kind of where is your money and what you are building towards. Yeah, thank you.
Thanks, Kimbo. So next one is I think the time is very limited, so we will quickly go through about the Q&A session. So can you see my screen? This is about Dragon Cypher Joint X-ray program. We will have some questions, but from the summarize, there will be some overlap questions towards how to explore the entrepreneur as well as capital opportunities, especially connected with Western and East. So I will quickly introduce Dragon Joint X-ray program with Cyport, and maybe Dr. Guo will give more detailed examples, especially towards our portfolio companies. For example, Himo's Trader OS is one of our portfolio companies here. So for Joint Cyport Dragon Joint X-ray program, it is one of the most fantastic program which will connect both Western and East Asia Pacific areas innovation, especially in the areas of AI and Web3. So it will focus on early stage AI and Web3 entrepreneurs and startups. We will have a 3 months program. First phase will take place in Hong Kong's Cyport. Additional one we will take place in Silicon Valley's Draper University. We will select the top tier of the cohort. The reason for Cyport Dragon Joint X-ray program, there are 3 reasons that come for that. First is that there will be the world-class mentorships, for example, included with Richard, we just have talked about. We also have some other mentors from very experienced areas, for example, Consensus, Galaxy, Dragon's venture ecosystem, as well as Quantum, BitGet, etc. A second one is there will be a tailored acceleration program regarding the startups, especially that try to expand, otherwise expand from Asia Pacific to North America to global, otherwise from other regions that try to enter into Asia Pacific areas innovation ecosystem. So there will be tailored acceleration resource, for example, help you to design your token economies, how to go to market, how to pitch to the potential stakeholders and investors. Last one, there will be potential the financial support. The cash flows come from 2 ways. First one is we mentioned about the Hong Kong's government is very supportive for the startups ecosystems in Hong Kong, especially for Web3. Additional one is we will have the investment alliance just showcased here, ranging from, for example, Solar Ventures, Draper Associate, Dragonfly, Gobi Ventures, HashKey, Outliers, Hashed, etc. There will be an investment alliance to help the portfolio company easy go-to-market, easy exposure to the international crypto and AI early-stage investors. So this is the advantage of CDDGAP. So if someone would be interested for our program, at this moment, this program is open for the cohort 2, and welcome to connect otherwise me, otherwise Dr. Guo, Richard for further discussion. So Dr. Guo, do you like to give some examples of previous portfolio company in cohort 1, how CDDGAP helped them?
Of course, the first example is TradeOS. Okay, TradeOS is excellent, amazing project in our cohort 2. And also we have some project same like the tax SaaS provider for the crypto asset, and also for the Also, another voice for the maybe we have two projects for the marketing for the digital asset for the digital asset marketing area. And we have we group our projects into the two groups. One is related to the AI area, and another is related to the RWA and stablecoin. Okay, and if you like, if you want to find more information, we can provide the link for you guys. Okay, thank you.
Thanks for the details, especially towards the cohort one, how CDDJIP enable the entrepreneurs